Hi, everyone. I'm Kayla Henry, and I'm a realtor in Bozeman, Montana with Realty ONE Group Peak.
I'm Kathy Zalewski. I am also a realtor with Realty ONE Group Peak in Bozeman, Montana.
So we wanted to do a video today about a 1031 tax deferred exchange. It is a code with the IRS that allows you to buy and sell like-kind properties without paying any sort of capital gains taxes.
And just a little disclaimer, neither Kayla nor I are accountants, attorneys, or anything but just
CPAs.
real estate agents.
Yes.
So this is something that we come in contact with because we do have investor clients that like to use a 1031 exchange because it is a way to defer taxes. However, generally speaking, we are telling them to confer with their accountant and their attorney.
Yeah.
So remember that. This is just a little
info video. Please don't make any moves without consulting the appropriate people.
Excellent.
And so I guess who would maybe use a 1031 exchange, Kathy, in your mind?
Okay. So it is dictated by the type of property that you're buying and or selling. And so generally speaking, this is an investor. And by that could mean a family that has a lake home that they rent out 6 months out of the year, and then they use 6 months out of the year. So it doesn't have to be like a big corporate investor. It
doesn't have to be like multifamily or big apartment complex.
Right.
It could be a single unit.
But it also could be multifamily apartment complex, something like that. Yeah. The like kind is specific to type of property in that it's real property, not vacant land.
I think you can actually do vacant land, maybe something we want to look, but I think the real one that I've heard is you can't, sell some stock and 1031 into real estate, right? Those are not like kind. It needs to be real estate for real estate, and it is not applicable for stock in any way, shape, or form.
So maybe do you think it's, question, and if we come up with the answer, we'll put a link to our answer in the comments, but perhaps as long as it's real property, so maybe vacant land to something.
I think that would work. That's my understanding of it. Again, please consult the appropriate people, or again, ask us and we can consult the appropriate people. But yeah, I do believe it truly is real estate like kind. People can get a little hung up with, well, I'm selling a fourplex, so I need to buy a fourplex. That is not true. You can absolutely change your fourplex into an eightplex, change your fourplex into a duplex. You could move across those lines.
Or a vacation home that you also rent out.
Exactly. But the key piece being that it's an investment property.
Right, not a primary residence.
Yes.
Okay.
Yep.
So that kind of does that.
And I would say two real key pieces to this. Let's talk about that now maybe. So number one, of course, you are not paying capital gains taxes, which can be a very significant chunk of money. And then number two, you are upping your basis. So again, that is a nice way to reset those capital gains taxes moving forward.
So for example, Grandma and Grandpa owned a duplex and they willed it to the grandkids. So now this duplex has been in the family for 40 years. It's paid off. They paid $25,000 for it in 1968. And today it's 2026 and it's worth 1.5. Okay. So now that 1.5 is great, but if you had to pay tax on the gain from 25,000 to 1.5, that would be painful.
Yeah.
Even if it were free, right? That's still painful. Because you inherited it, right? So what the 1031 does is allow you to take that 1.5 and create and invest in something else, and you've created a new basis because you've moved it from one real property to another, not taking it cash, not cashed out, not anything. And therefore, that's where the tax deferment comes in.
Meaning if in 2 years you then choose to sell that $1.5 million property that you purchased for, let's say, 1.6,
you only pay on
you're paying capital gains. Yep.
On the $100,000.
And bad math on other fees and stuff like that, but you get the gist.
Generally speaking.
Yeah.
Round numbers.
Yep. And so real key piece with this is timing. Really, again, this is something to me you want to prepare for and plan for, not try and do last minute. So there is a timeline with which you need to perform on. And then to me, the other real key piece is you absolutely need to have a QI, also known as a qualified intermediary, as part of the 1031 process. So tell your real estate agent, Kathy or myself, that you intend to perform a 1031, and either you maybe have a 1031 contact or you would like us to connect you with one, and we can get you in contact with the right person who will help you structure this and set it up, because you as the seller can never have those funds hit your bank account. If those funds hit your bank account, dead done, you're paying capital gains taxes on it.
Right.
And so that is the QI's job, is to help you. Number one, they will hold the funds for this time period that we're about to lay out, and then they will help get those funds to the right place for your next purchase.
So the reason that we say timing is important is because that money you're going to have sold your property, and then it's going to sit until you identify the next property. There are rules in terms of how long you have to identify the next property. It can't be 3 years. In fact, it has to be, you can identify up to 3 properties within 45 days, but you have to close on them within 180 days.
You have to close on one, or I think it's only one of the 3 within that 180 days.
And so that, of course, is kind of dependent on how much money am I making and what am I investing in. Yeah. If we go back to grandma and grandpa in the duplex and I have a 1.5 to invest in, maybe I am buying 3 $500,000 houses.
Right.
You can do that.
Right.
But it all has to be done within 180 days.
Yes.
So that's kind of the most important timing aspect to remember. And of course, if your money's sitting with the QI, you're not making interest on it. It's not in your bank account. It's not doing anything for you. So the faster you move that along, the better.
The better. Yeah. And so some people have asked, can I use, again, just taking that example, let's say you have, $1.5 million to purchase something with. Can you purchase a $2 million property with that? Absolutely. You can either get a loan for the other $500,000 or bring cash if you have that as well. But you can very much increase everything all at once if you want. Or you can do the opposite. You can say, well, I only want to buy this $1 million investment, and then that's okay. I will pay capital gains taxes on the $500,000 that I'm taking back.
Right.
I think they call that money you get back as boot.
Yes.
Just a nice
mortgage
little term.
Boot. Well, if it's mortgage, in fact, that you're paying off, but yes, boot.
Yeah.
So yeah, I think that is, so there's many different ways that you can manipulate this, but again, this is a tax deferment technique, strategy, and best to consult an accountant. And I have seen it done where, people will take a lake home in North Dakota that's worth 1.5, and then they buy 3 homes in Arizona that they have for each of their kids, but then the kids rent them out or Airbnb them or something like that. So then they're still investment properties, assuming that the property in North Dakota was used as a rental at some point as well.
Yeah.
So you can do a lot of different things with this. It can be very advantageous generationally, which is great because we, of course, believe in real estate as a wealth building tool.
Well, not just believe, it is the biggest wealth building tool for the average person.
Right.
And so this is a really great strategy because, again, this can be applicable to a $100,000 piece of investment. It doesn't have to be big numbers. It's truly any investment property. And so it can be a really great way to keep more of your money, to do more of it, to do more with it. More investing, more real estate purchases. Yep, to get less fees. And so I would just say, from, again, a buyer's standpoint, as a 1031, if you are intending to perform a 1031, if you're that buyer, just keep in mind, again, there really is that timeline. So being prepped and ready to go, knowing what properties you may or may not buy can be really important, because when you close on your relinquished property, that is when the clock starts. Why we love a 1031 buyer from a seller standpoint is because, of course, they have a timeline to perform on. Yep. And they tend to be, I would say, less particular, mostly because it is an investment. It's not a primary residence or anything along those lines. They are truly just looking for something where the numbers work. Right.
So yeah, I think 1031 exchanges are advantageous. They're not just a tool of the rich. Anybody can use them to continue to raise their basis and lower their taxable gain on properties that they might be investing in.
Yeah. Something to certainly keep in mind and keep on your radar. I know it's something that the National Association, like RPAC, our realtor lobbying party, really spends quite a bit of money and time keeping this on the ballot and keeping it active for the consumer. Obviously, yes, it is a beneficial tool for realtors to be able to help our clients trade properties, right? But it's truly a really important piece for the general public and consumers and buyers and sellers as well, because it just really can benefit you in a huge way.
Yeah.
So
1031 exchanges, we will attach a link. We kind of what we base this video off of. The IRS has got a pretty good fact sheet, so we'll attach a link to that in the comments. But please feel free to reach out. We love your comments. We love that you watch our videos. We appreciate that very much. Please subscribe and like so that you can be updated the next time we put out something new with new information.
Thanks for watching.
Thanks. Have a great day.